Good evening and welcome to the Australian Stock Market Show. Well, what a turnaround we had last week in the Australian stock market with the All Ordinaries Index rising around 2.5% for the week. So, is this the start of the next bull run or a suckers rally? We'll keep watching as in a few minutes we will give you our views on the Australian stock market, including where we think it's heading. Again, we have a great show lined up for you tonight, as later on we will get into sharing with you whether you should buy nickel or uranium now. What do you think will be the answer? As always, this means we also look at the best stocks in those areas. First up tonight, we'll share our hot stock tip for the week before diving into our take on the All Ordinaries Index. So sit back and relax as we get into answering your emails, phone calls and texts, and we give you the answers to some of the most important questions around the stock market. Hello and welcome to the Australian Stock Market Show. I'm Dale Gillham, your host for tonight, and joining me is Janine Cox, and we're Australia's most trusted stock market educators.
Well, thanks, Dale. I'm looking forward to tonight. You know that I was thinking about how we help people to buy and sell shares. But if you ask me, that creates an interesting situation. If one person sells a share and another person buys it, do they both think that they're smart? With that in mind, we've loads of stocks to look at and share our views on with you. Now, let's kick things off with the weekly hot stock tip. So Dale, what is your hot stock tip for the week?
Well, it's a stock that I've been looking at. What are you laughing at? It's because I get excited and my brain went in first before my mouth, right? Something like that. No, it's a stock I've been watching probably for well over a decade, isn't it? It's called Jumbo Interactive, and I first saw them at a microcap conference.
Which is coming up, isn't it?
Which is coming up next month. The microcap conference is in Melbourne. It's every single October in Melbourne at the Sofitel Hotel.
Yes.
You can Google it, but most often I know it's boring old farts like me that go. Or basically industry people go, but you can actually go. I'll be there, and you'll be there if you take some time to go there. I'll get you a ticket.
No, I won't.
But let's get into Jumbo Interactive and have a look on the screen. You can see there it's consumer cyclical there, and obviously it's currently at 15.44. Not too bad. Dividend yield's very low, 2.82. PE ratio is rather high from what people tend to like, but I'm not too worried about it. It's a very, very good growth stock, and you can see there it's up near that 52-week range through there. But it's not a bad stock. It's got a lot better over the years. I mean, when I first saw it, it was a microcap stock, but I did like it in terms of where I thought it would go. Now, I was looking at it when I was right back here, when it's a lot more illiquid. But you can see how it's taken off and grown beautifully up until 2019 before it fell all the way down here into that March 2020 low with COVID, but it was already falling quite heavily.
I guess the real question with the trend now, is it going to start doing what it was doing prior to that big run up?
I don't think it will. I think it's now, I think this was an overheating of it, and a lot of people kept jumping on and jumping on and jumping onto it. I think it was an overheating, and you'll see what I mean in a second when I put this first layer of work on. You can see here it really is, it's following that sort of momentum line. It's just come right back, and again this is from these sorts of points through here, and it's just hit it through there in 2020. It's just come back to normal, what it would normal travel onto.
That's great to see, isn't it?
So we're going to see in areas where it's going to move away from the line and then come back to it again, and I think it's just about poised to break through here, because you can see there's some resistance around that.
As long as it stays above that June low, then you'd be reasonably happy with that, wouldn't you?
Yeah, I'm just waiting for it to break through this sort of area, and then obviously you've got that next area from 16
That's
to 20.
huge resistance.
That's 30%.
Yeah.
In terms of that. So I'm looking at that saying this looks really, really nice. Now I'm just going to put another layer on it. I'll take this other one off so we can see what we're talking about here. Beautiful trend line, or trend through in there. It came off, looking good. Found some really good support around that, just under $12. Moving up through it. So I think if it gets through this is still a monthly chart, looking really, really nice. But I'm going to take you just quickly onto the weekly chart, so you can have a little bit of a look at it, and you can see there it's moving up quite nicely. Bit of resistance around here in terms of its finding let me click on that layer first.
Actually, you probably wouldn't have to wait for it to take out that June low. If it took out the low of just a couple of weeks ago, you'd be a bit concerned about it.
Oh, this one, yeah, because you've got, actually, this is a valid trend line up through here. So if it broke below there, you'd
What's
be
your
getting
volume
out of it.
doing? Have you got volume there?
No.
Quick, be quick, think quick.
No. You can be patient. So, but obviously there's about 8 or 9%, but if you're bought in when it got through this sort of level, that's the level that you want to get in above this sort of level there, that 1630 level. You want to get it through there, get through that resistance and start moving up, but I would think it'd be a nice, good
So what sort of portfolio does this stock suit?
This would be a growth portfolio, and it'd be not one of the first ones you put in, it'd be one of the, if you had a portfolio of 8 to 10 stocks, wouldn't want to last couple, but you'll get some good returns out of this one. I do like it.
Great, thank you. Well, that's it.
My tip.
That's it for our weekly hot stock tip. I hope that you're ready to text in or call into the show. We prioritise callers over anything else. So call now on 03 9290 9988. That's 03 9290 9988. Or you can also text us on 0423 959 846.
Okay, and to give you some incentive, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So make sure you grab your phone right now and dial 92909988. Now, while you do that, tonight is the first Tuesday in the month, which means we take a look at the Australian stock market and give you our thoughts on it. So how about we get into the charts now, Janine? There you go. It's all over to you, isn't it?
Wow, are you going to release control? I don't believe it. Okay, we can see that the All Ordinaries Index is on the screen there. Now, really, what's most interesting to me is this sideways move, which is continuing to persist. Or it's actually not just interesting, it's quite annoying now. I'm just over it.
I'm over it too.
I'm over it. Come on, market, just go one way or the other. That's what we want now. But ideally up. So if we see the market rise, and you've probably said this in your market wrap already, above this high of 2 months ago, that was back in July.
I've got to put my glasses on for
then
that.
you know, the market's more likely to keep pushing higher. So that's what we're really waiting to see at this point. Now, I thought what I'd do today is put another chart overlaid over the top of this. So we can actually overlay any chart, we can overlay multiple charts over not just the All Ordinaries Index, but you might be comparing a stock to an ETF or to an index, and it's really handy to see how things are unfolding by comparison. So you can see here that the Hang Seng...
okay, now you've told everybody what you've overlaid.
Oh, geez. I just thought you'd know. You have to read my mind.
I know.
The Hang Seng, so it's good to compare Australian markets to Asian markets to see how they're tracking. And we can see that for quite some time the Australian market...
Why?
Because we're classed as Asia. So in the big picture around the world, it's like Australia's, you know, a 15th of anything. So we're bunched in with Asia.
Okay.
And so quite often you look at Asian markets, and sometimes it can just be whatever's running. So it could be that if a particular market has a similar or common dominated sectors in their market, then it will, and that's what's going on around the world. If that's really hot, then that could drive both markets.
Was running hot last year. Yeah.
And that can actually create some of those similarities as well.
Okay. So why the Hang Seng right now?
So at the moment we're seeing that there's a bit of divergence between the Australian market and the Hang Seng, but more recently they're sort of coming together. So we're seeing this common theme of this short-term sideways action happening, and we've got it on our market there. So we see a breakout on our market. I'd say that a break above the Hang Seng, above this July high as well, will also signal that it's on its way, and that would tend to suggest that the boom that we've been waiting to see is actually really ticking over quickly, more quickly.
Yeah, I mean, that's what I'm thinking too. I mean, to me, there's an old saying, it's darkest before the dawn, and it doesn't get more doomy and gloomy, even though the RBA didn't put interest rates up today, which is great.
Yeah.
But you're looking at all the things, everything out there saying it's doom, 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 and that's all we're hearing all the time. So to me, that's the time when we get ready to buy.
Yeah, exactly.
And it is interesting when I think we were only chatting today with everybody saying, you know, when the market's not super bullish, we get less people watching our YouTube videos, we get less emails, we get less inquiries.
That's crazy, because that's the time to get ready.
Correct. That's the best time, and that's the time
to
when
be
you should
active.
be doing it. And you know, but people jump in after the market's already been running hot, and then we get the most amount of inquiries about our courses and the most emails and the most questions. And again, it's arse about.
Well, we don't
Pretty much.
mind waiting for when people are ready, but
I know, but still, it
Still.
is. But so your take on the market for the next month?
well,
Up or
look,
down?
I'd say, look, at this point, I don't know. Is the bottom? Very rarely do I
I
sit
gave
there
you a 50-50 choice,
saying
up or
I
down.
don't know,
Up or
and I'm
down?
just going to sit on the fence until next week.
That's
Because
not
look at
good.
it, it's got to get above last month's high, and it
I've
just
been telling
continues to do that.
everyone, it's
We've
up.
been saying
I'm
every
up.
week it's going to go up.
I'm
right?
voting up. I'm
And
voting
now
up.
it's not. So
I'm voting up. You're
well,
sitting.
look, think about it this way, right? Stocks are paying dividends at the moment. A lot of stocks are going ex-dividend. So that's
Yeah.
going to hold the market back for a little bit because the prices tend to drop
you got
off.
banks going
What
ex-dividend
happens in
next
the
month, aren't
US
they?
during this time? The US companies are paying their taxes.
You know
That
what
tops
happens
it.
when you sit on the fence, Janine? You get a pain in the ass. Okay.
Okay, well that's it on that note for our thoughts on the Australian market. And next we have some great stocks to chat about, including ABC, APX and your favourite nickel stocks. And we've got loads more exciting opportunities, but well, now it's time that we get into our first email.
Alrighty, our first email is from Les. Now, Les has emailed us before, but he says, Dear Dale and Janine, I'm a fully paid up Talking Wealth subscriber and listen to the shows daily. I have already read Accelerate Your Wealth and created a trading plan, and am currently reading How to Beat the Managed Funds by 20%. Wow, thank you very much for all of that. He said, I will at some point become a student. I entered the trade of ABC on the 1st of August for 200 shares at $2.52. I then added to that on the 11th of August at $2.64 for another 200 shares. Now I immediately put a stop loss of 15% below my weighted average buy price of $2.58, which was $2.19. I was feeling pretty good when it hit an intraday high of $2.81 on the 21st of August. No need for me to worry as I had my stop loss in place. No stress here. Well, to my dismay, the mid-year report came out and generally trading was strong and predicted to remain strong, but they did announce that there would be no dividend. And whammo, it got smashed by over 14% in the share price on the 29th of August and another 6% the following day, which triggered my stop loss and I was booted out of the trade. Both these days were on higher than normal volume. What, if anything, did I do wrong, and should I consider entering ABC again given its fundamentals are good and the future is solid financially? Thanks, Les.
Really great, lot of questions there, and good stock.
So
I mean,
what's-
he's picked a really good stock. I just this whole thing of reporting season and stocks being sold off, and it's been prevalent. As soon as companies come out and they say all of a sudden there's no dividend, that's it. Whammo! They get, like he said, like Les said, they absolutely get smashed. And this is a good example. But I wouldn't be too disheartened about this particular stock just yet, because it has a habit of doing this sort of thing at peaks and then consolidates, falls back a bit, consolidates for a while, and then off it goes again. So just have a look at the monthly chart while you're thinking about what you want to say.
Well, I mean, I've got answered two of his questions, but anyway.
Yeah, well, look, I mean, I just want to show you this. Look at this sell-off here. This was November 2010. The following month it reversed, went sideways, fell down again. So, but it only does that for maybe, 5-6 months, and then off it goes again. Same thing here, pulls back all the way into this low over 6 months or so, and then off it goes again. And again, the same thing happened again, but for less time, and it continued to trundle up. So I look at this and I think, is this the same as that sort of that pattern unfolding and that personality unfolding
Could quite
again?
be. I think, because he said, what did he do wrong? And to me, there was probably two things that he did wrong. One is he bought a second parcel 10 days after the first one. You could have, if you just buy one parcel of your share, you don't buy another parcel 10 days later, because that doesn't make sense to me. Because you are increasing your risk there. You either take a position or you don't, in my book.
So why do you think he did that?
I don't know. He doesn't.
Price went up.
Well, price went up, but that doesn't mean you buy more of it. You should buy a full position in the first place. If it's a good buy, it's a good buy, not buy here, buy here, buy here, buy here. The second thing is he used for his stop loss, he used his average price of the two buys. That's wrong.
Yeah.
You should always set your stop loss on the highest price that you've paid, not an average of the two prices. So that would have seen you stopped out a little bit earlier, yes, but it would have preserved more of your profit on the first trade. So always set your stop loss on the highest amount you've paid. So that was the second thing. But you'll learn a hell of a lot more when you do the course, Les, to be able to protect yourself, how you could have got in this a little bit earlier. But
look, it's easy to say in hindsight for people to make that determination.
Yeah.
I guess from hindsight point of view, it was, I think we talked about this on a previous show as well, it had run so hard already. So that was the other thing.
Correct. That's what I'm saying. He could have
Yeah.
done more anyway. But we do have a caller on the line, Gillham, we
fantastic.
need to get to. I believe we've got Jay on the line, have we? Hello, is that Jay?
Hi, Dale.
How you doing, mate? How you?
Yeah, I'm good, thank you. It's just like breaking up a bit. So, can you hear me?
I can hear you, mate. Where are you from?
Yeah, I'm from Sydney.
Fan-
Forestville, yeah.
Cool. So they're paying the power bill there so I can still hear you?
Oh, yeah.
Fantastic. Thank you for calling into the show. You've got a question for us today?
Well, I just wanted to, ask you a quick question, or maybe wanted to learn your take on CTT, which is Sater Limited. Well, it just reported in August, and it reported pretty well. And it has given the forecast of like the sales momentum is going over, though it is in the retail sector, but then it is very volatile stock. But then, looking at the momentum, I feel like, it is the good stock to be in at the moment. And well, I entered at $3 and, we'll have a stop loss somewhere around like at the recent lows, which would be somewhere around 2.4. I know that would be like 20% down the line, but then I'm ready to sacrifice 20% given the, so that I can leave some room for the stock to play around. And, if you could just, have a look at it, that would be great.
No, that's okay. This is a short term, medium term or long term for you?
It's like short-term trade.
Okay, how long is that? Like weeks or months?
Well, like somewhere around like 2 to 3 months.
Okay, 2 to 3 months.
Yeah.
And what sort of reasoning were you buying it? Did you do fundamentals or technicals or a combination of both?
The first thing was fundamentals, and secondly, I tried to enter in a like counter trend type.
Okay.
And that's all.
Oh, that's fine. No, I just like interesting how you do it. I don't have a problem with you having a 20% stop loss because you said it was a volatile stock, so you probably looked at it and say, I needed to give it a bit more space. All too often people set them too tight.
Yeah, sometimes it goes like 10% up in a day, and then, at the same time, the next day it goes down 5%, and, I just watched it very closely, and then, yeah.
Fantastic. Well, Janane's got it up. She's had a good look at it, and I'm sure she's going to give you some fantastic answers. So thanks for calling us today, Jay.
Okay, thank you, Dale. Have a good evening.
You too.
All right, so this is an interesting one that Jay's brought up. Definitely is interesting. I just think that the consolidations that we're seeing on this stock are really nice little moves. It just slows down for a little while and then goes up again, slows down, and then it had a big move up. But it's done this before. So this is why I'm really finding this stock very interesting, because of the repeating patterns that we're seeing on the stock. We saw back prior to the high here where it made that consolidation, rose up strongly, doing a similar sort of thing to what it's doing now before it burst out of the blocks.
Looking good, isn't it?
It's looking good. Question is, will it do the same thing again? Well, that's hard to say. It's gapped up, which, on a stock with liquidity like this, that you've got to expect that. Will it fill the gap?
Reasonable
we don't know
volume.
yet.
Look at the volume going through.
Volume's reasonable as well, but I guess right now I just would be waiting. It's way too early. I'm just having a look to see how far it is to that low. It's really a long way down. It's 27% by the look of that to that low. So you can't look at setting your stop loss there.
That's not where he bought it. What did he say his buy price was? $2 something? $2.70 something?
$2.70 or something like that. So he's bought down near that towards the low.
Well.
But he's bought when it's falling. So that's the other thing. It could have kept falling. So that was the risk that he took. But you're not really going to know until it gets above this high here. So
whether it's starting to move up.
Yeah, this high at 346. So you need to wait to see that happen. If not, you've got to decide where to draw the line in the sand. And probably given where he's bought it, it would probably be a reasonable place to set a stop loss down somewhere near there. There's actually a low there, so that's really nice to have that little low there.
Okay.
But you could use either of these lows.
All right. Is that all you got to say on CTT?
Yep, keep studying, Jay, and we look forward to hearing from you again. Looks like we've got another caller on the line, and it's a lady this time, and it's Michelle. Michelle, how are you this evening? Welcome to the show.
Hello, hello, Janine. Michelle Stevens here. How are you? It's been a while since I've spoken to you guys.
Oh, really? Oh, look, you can come on more often if you like. We'd love to hear more from you.
Hey, that's cool. That's cool. I wanted to ask about Qantas, Janine.
Yes.
I've just recently bailed out of Qantas because of what's been happening with Qantas.
Yes.
I bought it at $4.62, $4.62, and it went up at one stage at $6.60 or thereabouts.
Well done.
I feel that I've actually have decided to get out of it because of what's going to be happening in Qantas, and I've been realising of a stock loss that's been going down, and I've wanted to protect my overall profit because in actual fact, out of all my stocks, Qantas is actually doing the worst out of all of them.
Right.
So I wanted to protect my overall stop loss.
Very wise.
And I just sort of thought maybe perhaps this is something that I just needed to do. It's been sort of going down gradually, and I decided today, no, I'm getting out of it, and I got into A2 milk.
So do you have a specific question about, what is it about Qantas that you would like us to help you with?
But I wanted to basically find out whether if I correctly put the rules in that I should have done when you're sort of looking at when your highest stock is going down.
Okay.
Like a trailing loss, and I just want to know.
Yes.
This is the first time I've done this.
Okay.
I just want to know whether perhaps if I did the correct thing.
Okay, fantastic, Michelle. Thank you so much for your question.
Can I ask a question for Michelle? Why did you buy A2 milk today and sell Qantas today? What was the reasoning?
Sorry, Dale.
Why did you buy A2 milk today?
I suppose basically because I think they're going to rise.
Yeah.
I believe they're going to rise. The actual fact that if I had the two shares in both hands, Qantas and A2 milk, I would have. I believe that A2 milk to me was the winner. That's going to sort of, I think, bring in the longer term, because I always have a long term policy of looking forward rather than short term, and I think in the long term it's going to serve me better.
Is that fundamentally you've looked at it and say it's going to be strong, or is it a technical reason you've bought it today?
So can I say again? I'm sorry.
Was that a fundamental reason or analysis that you used to buy A2 milk, or did you use some sort of technical reason?
No, I suppose a little bit of fundamental and also a little bit of how I've been sort of listening to the news and also listening to you guys as well.
Okay, oh, that's okay. I just wanted to know a little bit because I know we're going to bring up A2 milk for us.
Yeah, I've got this one.
We're going to bring up both for you because I want to have a look at both of those two stocks. But anyway, thanks, Michelle, for calling in. We do love hearing from you, so don't be a stranger from now on, okay?
Yeah, that's okay, and thank you for the email earlier today.
No, my pleasure. You take care.
Okay, Michelle.
Thank you.
Thank you.
Thank you.
All right, so we're looking at Qantas first. Now, isn't it? She must have read our mind. We're going to talk about Qantas later on with it, but that's towards the end of the show. But
I just drew a trend line on it, and if you look at the weekly chart, she should have sold it months and months ago.
But I mean, she's not wrong in selling now, given that the momentum started to move down. So good on you there. A2 milk, I think she's a little bit early.
I think she's way too early. And that's why I asked what she
I mean, she may have fluked it and picked the bottom. It's hard to say now, but there's no real sign yet. Not until it goes above this high here. That's the earliest possible.
That's why, because I looked at this stock a little while ago and I went, I wouldn't be buying this one. That's why I wanted to find out why she's bought it, because again, whilst the fundamentals will often lag the technicals, and we see
the momentum though is still to the downside.
The momentum's still very, very much to the downside.
So I guess it's more or less for Michelle, it's more or less if the big money's still selling it, why are you buying it?
Why are you buying it? Correct.
Yeah, that's really all we can say at this point, Michelle, but keep learning, keep watching, and we'll help you out when you need it. So now, before we get into some more great stocks, it's your time to support the show by hitting that subscribe button on YouTube. So do your bit for the show. Thank you so much when you do. And whilst you're there, hit the like button and tell us in the comments below what your favourite stock is. Now it's time that we get into our next question, which is from Gerard. Hi Janine and Dale, thank you for your Tuesday night show. I read your article today about APX. I have 850 units of that stock and I bought at $15.38 in December 2021. Since then it went down and I'm a firm believer that it will go back up. And I'd like to buy more of it as it's at the lowest price right now. I would like to have your thoughts on that move, please. I'm doing the right thing. Am I doing the right thing and stay with it, or what do we do? Thanks, Gerard. Does he get out? Does he stay in?
I think he shouldn't have bought in the first place.
Well, he thinks it's going to go back up. You know, that's what.
Well, that's what I said.
But that's what happens, though, doesn't it? When you buy a stock, if it falls, often investors will think, oh well, I'm really confident it's going to go back up. But based on what?
Can we have a look at the chart? We'll have a look at the chart. If you look at the chart, if I squash it up, this is where it was back in August 2020. So it was a 42. Okay, it was one of the darlings that everybody was buying back before, obviously, this whole... You know, in August 2020, it was after COVID. This was the COVID low down here. So it took off and it fell away. And so people were buying Appen and other stocks like this, including A2 Milk and some of the others, Afterpays. They were buying them thinking they were getting into them cheap. And I'm not saying Gerard that was his thinking. He might have some great rules and strategies and analysis around buying it where he did. But he's down a bucket load right now from here to here. If you look at that, there's nearly 90% he's lost on his money. Now, to me, that's not a good investment.
So it's hope more than anything.
So it's hoping. And there's tons and tons of reasons why you shouldn't have bought it where it is.
Look,
and
we thought
a
couple of months ago, maybe 3 months ago, it might have started to go back up. Can you just show that little bar that was pushing back up? But somebody was obviously pushing the stock higher there.
In through here.
And then all of a sudden they just sold it off. So,
correct.
You know, and reporting season can be so risky, can't it?
Correct. And that's the thing is, if you watch my report from yesterday, because I do talk about Appen and I talked about it as possible fun to watch, I wouldn't be buying it right now,
given it's kept falling.
I wouldn't be holding on to it in hope that it is going to go up, but it is in AI.
You know, when people are down that sort of percentage on their holding, what's the point in selling it at this point? See, that's the other thing.
That's a whole new question, isn't it?
New one, isn't it? Well, now it's time for our topic, and before we get into it, I'd like to share a quote with you. Actually, I found so many quotes I wanted to share that I went crazy, so I'm going to share two. What I would like is for you to tell me which one that you preferred in the comments below. But first, I have a tip for everyone. In order to support Australian companies, I want you to make sure that you type in Australia after the subject when you Google it. That way, you are presented with a list of Australian companies and content. We've got to get behind our companies, use their sites and buy direct from them. Have you wondered why we are presented with overseas companies now when we search? Give some serious thought to what I'm sharing with you. Thank you.
Is this one of your conspiracy theories, Janine?
There's no conspiracy there. It's physically happening.
Well, I know it. Every time I Google, I go, and it gives me all these US websites, and I go, piss off. I just want Aussies.
Thanks for that one. That's a really good description.
Oh, it just gets me mad, it does.
Great point. Okay, now to my quote. The first is by Indian businessman Rakesh Jhunjhunwala. In commodities, when prices go up, demand goes down. In stocks, when prices go up, demand goes up. So simple, but so true. And the second one, the government would not listen and force the Ranger uranium mine on us. But the old people were right, and today we're dealing with everything that they were worried about. Yvonne Magarula Mura, Senior Traditional Owner, Northern Territory, Australia.
Okay, so they were warning about this uranium mine, yeah?
Yep.
In the Northern Territory, and they were right.
There you go. So that's the first one, and the other one was interesting as well, but I think that stands out, that second one, doesn't it?
It is. It just makes sense. The more stock goes up, the more people want it, and it's sometimes not the way to go.
Well, we have loads to cover, so let's get into talking about commodities. Now, this area is where you can make some big money, and the commodities we intend to cover tonight are nickel, which has an important role in going green and with EVs, and we'll cover uranium, which I have to add, I'll never be convinced about.
Yeah, there's a lot of things you'll never be convinced about, and some of them I can't even talk about on the show.
Okay, don't go there.
But I think we need to chat briefly about the uses for nickel, though, before we get into the best opportunities. Now, according to Geoscience Australia, the best opportunities, basically the best, how do I say it, the best attribute of nickel is its anti-corrosion properties. And did you know that around 80% of nickel is used in steel productions? Do you have any fun facts you'd like to share with our viewers?
Well, there are a couple of good ones. As a matter of fact, yes, the Geoscience website also showed a few interesting points, didn't it? It showed that 65% of the world nickel output is consumed in the manufacture of stainless and heat-resistant steel. Get ready for this. I need to take a deep breath.
Yeah.
No comment from the back
Leave
stalls
some
there.
oxygen for me.
These steels are used widely in the chemical industry, motor vehicles, medical appliances, electronic, engineering, construction industry, and there are so many more. The uses are just significant, aren't
Well,
they?
they are. I mean, it's consumer electronic products, you know, your utensils, cooking utensils, cutlery, sinks,
Everything in the
washers, you name it, white goods, blah, blah, blah.
Would you like a drink now?
I think I do.
All right.
Martini.
While we're waiting, we can have a look at a graph. Would you like to look at a
I
graph?
would like to have a look at a graph. Is it about nickel? Something like
before-
that?
yeah.
Just before we do, we have seen a wave of nickel supply coming from Indonesia, and that's prevented the nickel price boom. And the nickel futures were trading at around $22,000 a ton, down around 27% year to date, and not far off the recent low, was it? Of what was it, $1,967 a ton?
You've done so well. All right, that's interesting, Dale. Now, would you like to bring up this graph so that the US Department of Energy, or would you like to take it away?
No, you can do that. I'm thinking. Sorry.
All right, okay, so now we're going to look at these critical materials, okay? So these are the critical materials around the world that are really important. So we've got uranium.
Yep. I'm going to put my glasses on.
So you can see in the red, it's at the top there, it says critical.
Yep.
Then we've got near critical and not critical in green.
So in that top right corner, they're critical.
Yeah, so there's the red section, that top right part of the box, and then you can see the yellow or the orange, not near critical, but not in the high critical. So here on the left-hand side of the graph, you've got low importance at the bottom to energy, and then high importance to energy. So you can see nickel is right up there with lithium in terms of being critical, and also there's a supply risk with it. I think this graph is fantastic, and I think we should bring it up whenever we're talking about some commodities, just to really understand where everything's positioned. But you can see phosphorus and these other ones, manganese, titanium, not so important, but copper, near critical, uranium, aluminium, fluorine. But look at all the red ones.
Wow.
There's just so much in there that's really at critical.
Magnesium. I have magnesium every night.
But it surprised me that maybe you're eating the world's supply.
Maybe.
But it surprised me that nickel was right up there in the red.
It does actually. But again, when you look at what it's in, you can understand why it's right up there. I mean, obviously, you can also understand why uranium's up there. Copper, we need copper for everything.
Yeah, that's true.
There's so many uses for these sorts of things. Love that. Well, again, I think you're right. We should be bringing this up quite regularly to show people about it. But it just shows you what there's an opportunity for anyway. So,
it does indeed.
But, you know,
yeah, all right. Well, look, so we've looked at that graph, and that's the interesting part about nickel that I think that we need to pay attention to. Now, I'm just going to have a look at what we're going to do next. So after we look at nickel, we're going to look at uranium, but would you like to look at some nickel stocks as well?
Well, we can do that.
Or should we look at uranium first? That's probably best.
Well, we need to look at this nickel spot anyway, don't we? So we're going to look at that.
All right, so the nickel spot price. Now, I don't know what's happened here because I haven't followed this for so long, but my data, there we go. We've actually got this. Yep, okay, so we can see here these lows, right? You can see at the bottom of the chart there, these lows. It's finding support. Now, this to me looks really interesting. The fact that that chart that we just showed before shows there's a critical supply issue of nickel,
Yeah.
And so we've had the situation with Indonesia flooding the market.
Yep.
But that's not going to last forever.
Yep.
We've got a chart that's looking like it's trying to find support now at a really important level. If we start to see the nickel price head back above, now I'll just have a look on my chart here. I'm going to expand this up so we can see it in a bit more detail, but see these highs here that we're looking at. So that was in July. There's one in July and there's another one here. So that's around $23,000 US dollars a tonne. If we see the price start to head back up above these sort of levels, and not until it does, are we more likely to see it trending back up again. But that's what I'd be watching for. And what you want to do is look for some nickel stocks that have a similar sort of shape to the
Which we're going to show them in a minute, aren't we?
We're going to have a look through some nickel stocks to see what, we've got a couple of nickel stocks and a couple of uranium stocks to look at today. But
Okay.
so that's really interesting. Now,
We're going to talk about uranium as well, so we want to show them the uranium
yeah,
chart.
so before we get into that, we've actually got to discuss that. So first of all, before we get into uranium, right, we want to remind you that our goal, we want you to really remember this, our goal is to share with you how to invest and do it safely. And that means preparing you for what's ahead in all areas of the market, including commodity stocks, which tend to be inherently more volatile. Now, it's so important that you're equipped with the right knowledge to run your own portfolio and navigate the risks safely. Just adding to what Dale just said, we can guide you only so far on the show, right? So at some point, you need to decide whether you are serious about your future wealth, and to invest in yourself really is the most important thing here. Now, if you're one of those people who has a willingness to learn, because that's a key ingredient here, then nothing can hold you back, and that's most important. Now, if you feel something is holding you back though, so sometimes people are too shy to say that this is what's happening for them, and please don't be. We're just people, chances are we've been through and experienced things that you're experiencing as well, so that we'll guarantee you that we've heard it all before and we know how to fix it. And all you need to do is decide to talk to us, and we can help you to choose a course that's going to get you on the path that you want to be on. Now, getting
we need
into
to get into the next uranium. Well, now we need to get into the uranium stocks. I want to let everybody know that what we said last week. It's that we keep really looking at important information flowing, and we want to keep doing that with the market and stocks for everybody.
Yeah, that's right.
And I know, as we said last week, we want to do that, and we've got a whole library to share with everybody over the year. So the more you watch, the more information that Janine's going to share with you on everything that we've actually got, because that really makes it easier for you to find out what's important. But I think it's about time we kicked off and had a bit of a look at uranium prices, and we've got a graph on the screen from the Cameco US XC Trade Tech.
The World Nuclear Org
Is the World Nuclear Org?
is where I found it, but that you're correct, and I'm not going to repeat what you just said.
Well, it's on the screen, so everybody can see that. I'm not going to repeat it
Now,
either.
the website actually said above the graph, it said, the reasons for fluctuation in mineral prices relate to demand and perceptions of scarcity. The price cannot indefinitely stay below the cost of production. So we can see that the uranium spot price is there in blue and the long-term uranium price is in red. And that's really interesting, and I'm going to tell you why in a minute. The price cannot indefinitely stay below the cost of production, nor will it remain at very high levels for longer than it takes for new producers to enter the market and anxiety about supply to subside. And you can see the short-term and longer-term lines coming together on the right-hand side of the graph, and the most important thing is that they're now both right. So we're seeing
They're both rising.
Everything's moving up now for uranium. It's starting to rise, and I can tell you I'm not particularly happy about this.
Well, we know about 10% of the world's production comes from the World Nuclear Association, and about 10% of the world's energy production comes from nuclear energy. Now, I have another fun fact for you. Did you know that uranium has a compound annual growth rate of 11%?
Yep.
That's pretty good.
And what does iron ore have, and what do all the other commodities have? Much better.
I don't know. I'm just reading off that website.
Look, I mean, I think the point here is that once prices start to move higher, then it was like what we saw with iron ore.
Yeah.
We get the cost of production actually remaining really low and the price is moving higher, then it's more viable for them to get it out of the ground, isn't it?
Okay, so how about we have a look at a uranium chart which we've got on the screen right now.
Okay, so this is actually an ETF, okay?
Okay, sorry.
So it's Beta Shares ETF. Now, I brought this one up. I've actually got the uranium one there, but I just couldn't make heads or tails of what was happening with that one. So I'd rather look at just the short term here on an ETF, which is going to show you a great deal more. So we're seeing a big push up in price. So that's sort of similar to what we've just seen on the price chart that you just showed before. So if you see this sort of thing happening on ETFs and commodities, the point here is that more than likely the underlying, the stocks will actually be rising as well, because with an ETF, obviously it's made up of stocks. So that's what you've really got to look for. And then you can go dig down and look for the stocks that are likely to perform best, or maybe some that haven't run yet, or potentially setting up to do so. That's really the goal.
All right, so let's go and have a look at the stocks so we can get stuck into those.
All right, now.
It's about time we did that.
Yep, we've got stocks to look at now. So we've got...
So what's your first one?
The first one is actually IGO.
IGO, okay,
Now, IGO is obviously a well-known stock. It's a fantastic nickel stock. We can see that it's been consolidating sideways of recent months. Now, if you think back to the nickel price, this doesn't look like that. So, you know, you've got to think about where this could be in the big picture. It could be part of an overall sell-off. If IGO turned around, because there's a whole heap of resistance, if we just look at the chart here, and I'll just get a line, draw a horizontal line across there. Yeah, now if this holds the stock back and it turns and starts heading back down again, then you know chances are that the fall hasn't finished. But because this is actually, it's got iron ore, you know, BHP, Rio, IGO, they've got exposure to iron ore, obviously. If this takes off and iron ore's going higher and all the commodities start to push higher, then IGO is not going to fall away.
No,
so that's what you've got to look at.
But that's what we expect is...
So I wouldn't necessarily look... You can look at the breakdown of the commodities that the company actually mines, look at which are the biggest ones in percentage terms, then go and look at the underlying chart for that commodity, get a feel for where the commodity is running, and then go back and look at the stock, because sometimes there can be situations that are happening with a company that that would be in the announcements. You'd see that in some of the recent reporting that's come out, maybe read a bit of that, but then wait for the stock to get above important levels like we're just talking about.
I like this stock. It looks really, really nice. I mean, if
it is a great stock.
If you're just looking at its momentum, it's pretty consistent. It's right across there, isn't it? It's just beautiful where it's heading. Oh, sorry, didn't do that. It's looking very, very nice, and it's come below that momentum, so it looks like it's going up. So I think if we do get some movement on some of those underlying commodities, then this should do well long term. So we've got another stock. What's our next one is?
Okay, the next one is Nickel Industries. Market cap 2.8 billion, another nice little stock. We've talked about this one on the show. This is a little bit more similar to what we were looking at with the nickel price. I'm just waiting to see if this bottom's going to hold here. This is the recent low in August. Yep. And we just need some nice little rules to tell us that it's going to hold, which I haven't seen yet. So it's a bit early at this point. You know, all the direction is still down. You can see there on the monthly chart, and we're just waiting for that to happen. But, you know, at this point we don't know whether the price is going to keep pushing up or whether we're just going to see a short-term, sideways move on the stock before it then makes its move. So it's just about being patient right now, really.
Well, yeah, it is about being patient, but I mean, from what we're talking about, there's no reason why this thing shouldn't start to turn to rise, is it?
Yeah, exactly. So that looks really interesting. Now, Poseidon Nickel, another nickel miner, we've got there. This one's a more speculative stock.
It's a lot more
POS is the code. You can see there. You wouldn't want this to be your heart monitor, would you?
I always struggle with this stock because it's called Poseidon.
Yeah, it's going down.
I watched that movie, The Poseidon Adventure, back when I was in the 70s. And so it's like, yep, that's about disaster.
Yeah, you're not going to go there.
It was the whole 70s disaster movies, but it looks like a disaster at the moment, doesn't it?
Yeah, so look, at the moment it's coming back to that low. Now, from a long-term perspective, that low is pretty important. So if it can actually find support there and start to turn around, that could be a huge sign. If it does start to move up, that this is a big bottom for this stock, and we could be in for a much longer run up then eventually.
So you're thinking, I mean, obviously it's in your list. Is this one of the ones like that you would put in your dark horse?
This would be more a dark horse because of the volatility and the liquidity of it,
Yeah.
but more because the only reason I keep it on the list is because it was right near this all-time low.
Yeah, because I mean,
Long-term
it's
low.
pretty close to nearly being a cent.
Yeah, exactly. But it's
So
not something that you're going to necessarily put a lot of money into, and it's not a stock that beginners would have in their portfolio. It's just it's a more speculative play
Okay, so what's the next one you've
and a
got?
short-term play.
It's a short-term play.
All right, the next one is Panoramic. Now, what you're noticing is a lot of the nickel stocks, and you'll see this in
Interesting.
the uranium ones as well, because I haven't gone for any big companies in this. I've just gone for a set of different stocks because otherwise we'd be talking about the same stocks all the time. So
Well, you would be, yeah.
it's just interesting sometimes to look at what else is out there. Now,
A lot of volume's
Panoramic,
gone through it in the last few months.
yep, it's only 115 million, this little stock, but it's really cyclical, just looking at how it moves up and down. When it does run, it really gets a good run for more than 12 months to 2 or 3 years at times. So,
Yeah, but in that time you're going to make 200-300%.
but right now you would just steer clear of this one. You know, we were looking at what's some of the stocks that people have bought over time when they've called into the show and they've been falling. You would not be going anywhere near this one right now. This is one for much further down the track.
Well, it could be. I mean, looking
very
at
early
this,
stages.
You know, looking at the volume that's come through, this could have just been an exhaustion of the downward move. So whilst I 100% agree with you, people shouldn't be getting into it, it is looking like it's just basing at the moment. So, but don't jump too early, because you're going to see, if it does start to take off, you'll see a bit of a move up. And it might be 50, 100% move up. Wait for it a little bit to come back and test these lows before jumping in. You'll have plenty of time, but I do like this. This would probably be my dark horse so far if I have to have one.
Right, great. Now the next one we've got is Centaurus Metals.
Yep.
Now this stock is quite interesting indeed in terms of it just, it looks like it's bottomed. To me this looks like it could be a low, a short-term low. And when you're looking at the monthly chart, and I'll bring that up first, that's 377 million. You can see there that it's found support off previous lows back in 2021.
Yep.
A nice little orderly move. It needs to hold though, and so we need to just watch over the next few months, I'd say. Get back above this high here and then get back through the dollar mark. Remember on previous shows we've shared with everybody that $1 is important. If it goes back above there, we could be up for a much bigger run.
Well, I mean, obviously you've got this little gap down here that's probably going to fill through that anyway, or probably go up to fill that. But I mean, at the moment, it's still in a downtrend at the moment. So if we put a trend line on this stock, it's moving down through here. So you
That's a
wouldn't be
nice line though, isn't it?
It is. It's just beautiful, and that's why I like this at the moment. So if it started moving through this line, and we're on a monthly chart too, we're not on a weekly chart. On this monthly chart, if you got it breaking through here, and especially breaking above that, you'd have to go with this one, wouldn't you? You know, especially if it broke through that
If
dollar
it
level.
suits your portfolio
Well, yeah,
criteria, because
correct.
you might have a cut-off for how many million the market capitalisation
Alright,
has
so
to be.
why is that important?
From a liquidity point of view, volatility,
Yeah.
risk.
You're saying, you know, depending on your portfolio, why is what?
Well, some people might have a portfolio that's top 20. Obviously, they can't buy anything outside of that if that's the case. They might have a portfolio that's for their super fund, and they don't want to be buying, you know, going in and out of stocks too often. This wouldn't be the type of share for that type of portfolio.
Well, that's fine too. I understand that as well. But to me, it's a lot of people just hit and miss with they just put different stocks in that they just capture their attention, like whatever sparkly in a shop, they go, oh, I'll buy that. And I find a lot of people do that. But this stock isn't necessarily, you can make a lot of money out of this quite quickly. As you can see, beautiful trend up, beautiful trend down. So just be patient and wait for it. But
You're going to find a lot of dark horses in this, aren't you?
yeah, I like this one too. I think this one's better than the last one in terms of, I think it just trends better.
Yep.
The other one's obviously lower price, but that doesn't mean it's going to be a better buy. And I find that's the case with some people. They think, oh, because something's 10 or 20 cents and it gives you a buy signal, it's better than something that's $1. No, it's not.
Well, if this stock gets going, where do you think it could go?
Well, it could get up to $4 or $5, couldn't it? Quite easily. So,
Yep.
all right, what's the next
All right,
stock?
the next one.
I'm getting excited. They're getting better as they go along.
Yeah. Now this one's
Holy
really
moly.
interesting. This has taken off already. So I'd say that if you weren't in it now, then you've probably missed the boat on it, because it was there was plenty of opportunities to buy into it back in, what was it, middle of the year.
Boss Energy, yep.
But whoever's in this now, it'd be a nice little trade. It has gapped up this week. I'd expect it goes up for another couple of weeks at least before we see it then come back and test this level here, whatever that is. You can see it currently 350 or 360.
That's another good looking one.
So that's a really nice little one. You get a trend line up there on the monthly chart underneath all of that. So we're looking at another one. This is Elevate Uranium. So they were two.
Another smaller one.
Yeah. So uranium
look at
stocks. Two uranium stocks. Look at this one. This
That's
is incredible,
doubled in
isn't
price
it?
in the last couple of months.
I mean, it's been down for so long, like Paladin, which we're going to talk about later on for the Talking Wealth people after the break. So looking at this one, it just looks lovely, doesn't it? The way that it's unfolded for a small stock. It's doing all the right things. We see these nice rises up, consolidate down. It's very rhythmic, even though it's falling away. We're still seeing this sort of cycle. These cycles come into this stock really nicely. Now, I wouldn't be buying it now, though, if you weren't already in it. I'd wait for that next pullback, see how it unfolds when it pulls back, and there may be a good opportunity for someone who likes.
It's likely to come back into that 40 cent range again, isn't it?
So, these are more speculative type shares that we're looking at the moment.
Okay.
So that's really what we wanted to talk about in relation to the shares.
Okay, so that's all the stocks, yeah? Cool.
It's all the stocks. Well, I do hope that you've gained a lot from watching us each and every week, and I know with certainty that you would gain way more than you expect in making the decision to learn more. And I really love hearing from people who are doing our course and they get so excited about how we've changed their whole way of thinking.
All right, we make it easy to learn what's important. That's what we actually do in here.
Now, please remember to tell us what you like in the comments section. It's really important. If you like what we do, let's hear your thoughts. Have your say.
Well, that's it for our topic for tonight. For those watching on YouTube, you can watch our whole 90-minute show just by taking a couple of minutes and get your free 7-day subscription to talkingwealth.com. In doing so, you also gain access to the full 90-minute version of the Australian Stock Market Show. You'll also get to watch my weekly Australian Stock Market report that I do every Monday. Plus, you get access to a library of hundreds of interviews with trusted experts from around Australia and the globe who are all there to help you live a happier, healthier and wealthier life. Now, we're constantly uploading new content each and every week, so make sure you head over to claim your free 7-day trial at talkingwealth.com.
Well, Dale, I guess, can you guess what time it is?
Is that a trick question, Janine?
It's time to get into your favourite segment, which has all of us saying, what the?
Who said that's my favourite segment? What, my favourite segment? What have you got?
Well, I have to warn you now, this topic will probably get your blood boiling, and for some, get your heart rate up if this has affected you. Get my heart rate up? You know I'm over 60. You get angry.
That's not good.
And it's about one of your least favourite stocks. Let's take a look. The title of the article on The Guardian says, the ACCC taking airline to court alleging it sold tickets for planes that would never fly.
What the hell? What? I saw this a bit on the news. I mean, how do they sell stuff? How do they sell tickets to do that? I mean, it's bad enough when they cancel flights. Now, I'd be hopping mad if that happened to me, you know, buying a ticket for a plane that wasn't even going to fly.
I know you'd be mad. Well, I know.
Jeez.
Now, can you give me a demonstration of what that would look like, you hopping mad? I'd love to see it.
No.
Well, according to The Guardian, apparently there were more than 8,000 flights cancelled, and it's alleged that Qantas was selling tickets for these flights, and tickets were advertised and sold. In some cases, this was going on for 2 weeks or more than a month after the flights were cancelled, and apparently there were huge delays in notifying existing ticket holders that flights were cancelled also. It gets you gripe when airlines cancel flights, doesn't it?
I was freaking mad. I actually really was. I mean, not that it happened to me, but I was freaking mad that the Australian government or the Australian people supported Qantas through the pandemic. I paid my Qantas Club membership every year and didn't fly for 3 years. And they've been on all this government money, and yet they use individuals' money to make billions of dollars, and Alan Joyce gets paid squillions of dollars to piss off. Like, seriously? I'm hopping mad.
Well, I thought I'd get that reaction. Apparently, the ACCC said Qantas faces penalties of either 10 million or 10% of annual turnover.
10 million's...
Ouch, that'll hurt.
10 million doesn't hurt at all. Not for Qantas.
10% of their
profit.
turnover.
10% of turnover will.
You are not wrong. The ACCC appears to be taking a really hard line on this. Now, we can only imagine what that could do to the share price. We know airlines have been saying that they are still not anywhere near back to capacity pre-COVID, and Qantas doesn't need this. And I think I read about that their flight numbers are about 30% down. And Michelle knew, didn't she? She sold them.
Correct.
She was smart.
Now, and what do you think of the job Alan Joyce has done?
Look, besides this issue, I thought he did a brilliant job.
Well, you weren't a Qantas employee. Talk to Qantas employees. They just, yeah.
It was the toughest time in history. It's easy to be critical about people doing a top job in some corporate.
Did the technology let Qantas down,
Well,
or
that's
did they
the
just
thing.
knowingly and willingly sell tickets they didn't have?
Well, you'd think that it would be the technology has let them down. You know, how are they going to prove otherwise?
Yeah, I'm sure they will. ACCC will probably have the...
I think it's all a coincidence with something that was being debated in Parliament at the moment about letting international companies in, and so they're just going to pump this thing as hard as they can. Well, is that all?
I've got a lot to say, actually.
He's got a lot to say. You've always got a lot to say.
I'd like to say that was a great What The segment, Janine, but it's got my blood boiling. So, but I'm sure a lot of angry people are are out there as well, not just me. And we know that airlines are right up there as one of the industries with the highest levels of complaints. So,
Well, thanks, Dale. I still like Qantas, and the word is Mr. Joyce stepped down 2 months early, and Qantas now has a new CEO.
well, they will have in the next couple of days.
And it's a lady.
And well, I think hopefully she does a better job of it. Because I mean, and look, I've been a Qantas Club member for 30 years this last month,
Fantastic. Well
and
done.
the service has got worse every year.
Has it?
Yeah, but anyway, thanks, Janine.
Well, you're not saying a lot for the staff. I'm sure they put in the hard yards.
Now it's time for you to pick up your phone and call us on 92909988. That's 03 for Melbourne, 92909988. I know Janine would love to talk to you. So pick up your phone now. Now, while you call us, we'll answer the next question. Now, this next question or next email is from Hamish, who says, "Hey, Dale and Janine, if you were a technical analyst," well, we both are, "and you had a buy signal on 2 different charts without care for their fundamentals, and you only had enough capital to take one position, how would you decide which trade to take? What other considerations would help you make a decision? Would you consider things such as overall pattern of the chart, the percentage gain to reach the closest resistance, the percentage gain to reach the all-time highs? Cheers, Hamish."
Great question, and yes, yes, yes.
Oh, look, well, yeah, but to us it's about a confluence. It's about, number one is what's the least risk is what I'd be looking at. So what do I stand to lose in terms of where our stop loss and what risk we're taking on that trade. But the second one is just a confluence, because it's what resistance levels is strongest. You know, just because there's a resistance level.
Well, that's what he talked about.
Correct, but but measuring the strength of that. And a lot of people don't understand what is strong and what's not strong. So people draw lines on the chart like I did earlier.
Oh, you can draw heaps of lines on the chart, and then you don't know where it's going to stop unless you've reviewed it properly.
So when we're doing analysis with our trading plans, we have rules stacked up, and you know, it's like if I showed up to a vacant block of land and in a Mercedes-Benz with a hammer and so I'm going to build a house, you go, well, you're not going to build a pretty good house with the Mercedes-Benz and a hammer. But if I showed up in a big truck with lots of tools and lots of people that look like they're tradies, you're going to get a good house. It's the same to me here, is we're stacking rules are stronger, like a trend line on a monthly chart being broken is stronger than a trend line breaking on a weekly chart. And there are a lot of other things that we put into that to add weight to our decisions. So it's not about percentage profit to me, it's about what's got the strongest set of rules to me to buy that stock.
So what you're really saying is what's got the highest probability of giving you a result. Yeah,
that's what I'm saying.
All
you
right.
just said it in less words, so well done.
I thought I'd better come in there.
Okay, but we do have a caller on the line, Janine. I believe we've got Lorraine, is it?
Yeah, that's me. How are you, Dale?
Welcome to the show, Lorraine. Where are you from?
From Queensland, Noosa.
Oh, lovely part of the territory. We've got a few of our
Yeah,
staff
can you
up
please
in
bring
Noosa.
some of that weather? I'm freezing here.
The heating broke
very,
this
very
afternoon and
warm.
it's cold here.
Yeah, very warm today in our summer gear. That's what it normally is here.
Well, good. Have you got a question for us tonight, Lorraine?
Yeah, it's the gentleman asked me earlier. It's not really on jumbo, but I'm using that as an example because you used it tonight or something. So I'm just questioning. It's supposedly gone through, if I can say, a trend line. Previously, a downtrend line. Now it's got some resistance there, as you say, at 1630. Should a person wait for it once it breaks up? Should you wait for it to return to that line before going into the trade?
Good question. That's,
Do you take it as soon as it breaks, or you wait for it to return back to 1630 or close by? In other words, to show, just to see if that's really is going to now be the support, or do you just take it full on as it goes?
Yeah, I know that question, it gets asked a lot by traders because pretty much everybody knows support and resistance, Lorraine, and they think, okay, if it gets to this level and breaks through, I'll buy it. And the brokers know that as well because people, and especially that's what Janine talks about, round numbers like $1 or $2 for resistance levels. Because people do that and they set their buys just above a resistance level and they go and buy. And what happens is you create this supply-demand vacuum there. So you'll often see a stock move through it and go boof, but then it'll come back to that line or just below that line because brokers know that. And what you see often when they're around those resistance levels is they use their house accounts and push it through to get all these trades happening, and then they sell into that volume coming through, and that's what pushes it back down. So that's why
you can't just look at that.
Yeah, you just can't look at that. And that's why Janine and I, when we're teaching students, a resistance or support level is never a buy or sell signal for us, ever. No, it's always something else that's in confluence with that. It's an area that we look for price.
There's a checklist. There's a whole list of things,
Lorraine,
But it's great that you're asking this question because this is probably, I'd have to give you a reward. That's probably the most intelligent question that anyone's asked for a while.
I think it's a 10
tonight.
It's a 10 out of 10, Lorraine, for me. It really is. So well done. Thank you
Janine,
for calling.
We females still have some intelligence left, don't we?
Oh, look, it's not, well, I was going to say something then, but I better not.
You can say whatever you like.
Yep.
Thank
you so much, Lorraine.
If it hasn't gone through the support level, and if you go to the monthly chart, it's sort of, if you were going by normal rules of yours, it could be a buy, but what stage how long do you wait? Because mostly once it gets through there, if it doesn't return, it runs away for quite a while, and then you're too late to get in again.
Yeah, As long as you've got some good rules around your buy, generally, we look for things like a weekly or monthly closing.
I guess
above
what's too late though? Like what's too late? In advance you can decide what's too high to get in.
Yeah, that's where you put all your analysis on it.
I guess that's another question for another night.
Thanks, Lorraine, for calling in.
Thanks for answering. Thank you. Have a nice night.
You take care. Have a good night.
Bye.
What a great question, wasn't it?
Fantastic.
I love questions like that because it helps everybody learn, doesn't it? It really does. Cool.
All right, that's all that we have on Jumbo Interactive and asking about support and resistance. We hope you've enjoyed our show on YouTube. Please show your support for the show by commenting below this video because we'd love to hear your favourite part of the show. Also, give us a big thumbs up. It really helps new people discover these videos, and make sure that you subscribe to our channel so you know when we go live. For those watching via Talking Wealth, stay tuned for the bonus content we promised.
In next week's show, we get into some of the best stocks set to outperform for the second half of 2023. We'll have some of the usual suspects combined with some great surprises. We'll also take your phone calls, answer your questions, and so much more. So make sure you put next Tuesday night's show on your calendar. Remember, if you have a stock that you do want us to look at or you have a burning question, then send an email right now to info@wealthwithin.com.au and then watch next Tuesday night's show as we give you the answer. Also give us a big thumbs up by liking the show and make sure you subscribe to the channel and comment below this video about what was your favourite stock from tonight's show. If you want to check out the rest of this show and others we've done, head over to talkingwealth.com and take up your free 7-day trial. Now it's time to say goodbye to our viewers on YouTube. We do hope you've enjoyed what we've presented tonight. For those watching on talkingwealth.com, stay tuned as we have heaps of bonus content for you. As always, thank you for joining us, but for now, goodbye, good luck, and good trading.